The U.S. Court of Appeals hearing oral arguments in Grayscale's lawsuit against the SEC over the agency's denial of its ETF application. Shares of GBTC on the rise since the hearing kicked off yesterday. Joining us in an exclusive interview is Grayscale CEO Michael Sonnenschein. How's it looking?
You know, coming out of oral arguments yesterday, we were, really appreciative of the opportunity to have our case heard in the, D.C. Circuit Court of Appeals. Walked away very encouraged from yesterday's arguments, and I think it's really a function of having the best-in-class legal team that we possibly can. They've been consistent throughout this process: the ETF application, the litigation, the oral arguments. And we're hopeful that the court will be persuaded by those arguments. And at the end of the day, it's never been clear. Investors want access to Bitcoin through an ETF wrapper.
What is the argument that you make and that the SEC makes about the relationship between Bitcoin futures and the spot price of Bitcoin? What are they saying? That it's harder to keep an eye on spot than it is futures? What's the basic premise?
Well, at its core, the bedrock of this case is the fact that the SEC has approved Bitcoin futures ETFs and continued to deny spot Bitcoin ETFs like GBTC.
What do they say?
Well, they say that there is not enough of an ability to detect fraud and manipulation in the underlying Bitcoin
in the spot
market.
In the spot.
Yes.
Okay.
But as we all know, and you guys certainly know, the Bitcoin futures market is a derivative of the spot market, right? So these are two markets that are inextricably tied. They have a 99.9% correlation. And so the actions of the SEC here are really arbitrary and capricious. And that is really the argument.
Normally, when you think of spot versus these crazy exotic derivatives that the entire world knows what derivatives are now from 2008, but they encompass a lot of things. But typically you'd think, if that's the tail, it's easier to watch the dog than the tail. You would know. What's different about Bitcoin? And do we just need more regulation of all of crypto before we get that answer? What's different about in this case? Why would spot be more difficult to oversee than a derivative?
We actually don't need more regulation for this particular issue, right? Grayscale Bitcoin Trust is a product that's been out there for 9 years, largest Bitcoin fund in the world, publicly traded since 2015, SEC reporting since 2020. While there is certainly good momentum in Washington around crypto-focused legislation, there is no new legislation required to bring GBTC further into the regulatory perimeter and have the SEC do what it's supposed to do, which is protect investors, right? And bringing it to an ETF wrapper would further protect investors.
You're convinced? If you convince the SEC, you got everybody else in line. I mean, you don't even know who oversees crypto at this point. How's that finally going to shake out?
Well, listen, there are a variety of commodities products, be it gold or otherwise, where there is a spot market that's unregulated, and there's certainly ETFs for gold and other commodities as well. So there are a lot of actual precedents out there that are similar to the predicament that the SEC and the crypto market finds itself in.
What would be any merit to the FTX lawsuit?
Well, we got to take a step back, right? So Alameda was the complainer here, and Alameda is the now defunct hedge fund arm of Sam Bankman-Fried's, FTX empire. We all know that that was an unregulated business, not a U.S.-based business. And the complaint is really now because Alameda's in Chapter 11. They're under new, management that, as a fiduciary, is trying to recover anything they possibly can. That's a misguided complaint, though, right? It flies in the face of what we're trying to do with GBTC. That's the best long-term product structure, and ultimately the one that's going to unlock the most value for investors, including folks like Alameda.